And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family. It's time for the market forecast for Tuesday, November the 15th. My name's John. Thanks for trusting me with your time. As always, we are focusing on accurate context, good risk management, and remaining patient in our trading. Obviously, we've seen some important economic numbers come out this morning, all of them really kind of encouraging for lower inflation. The PPI numbers, let's take a look, came out, all of them, lower than expected. That indicates that the raw materials that producers use to produce their products have eased as far as lowering of inflation. We still have high inflation. We're just getting a signal here that perhaps things are starting to ease a little bit, which is a good thing. We also had the New York Empire State Manufacturing Index come out for the positive for the first time since, I think, June or July. So that is also a positive for the economy and for traders and for the 401ks probably too. It's looking pretty good this morning. We do have a couple of talking Feds. We have Harker at 8 o'clock. We have Cook at 9 and Barr at 9. A couple of talking Feds yet to speak, so we have to be paying attention to them as well. But as far as the economic numbers for today, the biggies are out. So stocks were trading higher overnight ahead of the PPI numbers, evaporating yesterday's losses with a little help from Home Depot reporting better than expected results from Q3. Walmart also beating expectations in revenues and earnings per share. The Eurozone GDP results came in just as expected, so no surprises from the Eurozone GDP. We are seeing increasing optimism among the talking heads, those expert economists that we all see on TV. It seems as though they are getting a lot more friendly towards the upside, but already trying to pick tops. Crude pricing remains soft this morning, at least it was earlier, and we're down about almost $1 right now, about 1%. And continuing Chinese demand question seems to be the all-around answer for those questions. As the VIX has kind of tumbled a little bit this morning, of course, with the equities screaming to the upside. 23.26, the dollar index dropped considerably after those numbers came out. It's a new recent low, I think, at 105.40 last I checked, and the yield on the 10-year also lower at 3.78%. As always, make sure, if you like what you're seeing, hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. We will be going live right after the forecast today with Make Hogue Money. But again, I apologize for not being available yesterday for group coaching. All of you who sent in questions, we're going to have to talk about those questions on this coming Monday's group coaching, because tomorrow we have Jared Tendler, the author of The Mental Game of Trading, who's going to be with us for an hour answering your questions. It should be a really good group coaching session. You guys hear enough from me. Be good to hear from somebody else, and I look forward to that. I'm also going to be doing an interview with Deanna Angelo from Market Stalkers at 11 tomorrow. I don't have any details on how to get into it, but eventually we will make that available to everybody. It's something that she does called Drinks with Traders, although at 11 o'clock in the morning we'll probably be drinking more like coffee. We've got about 2 inches of snow on the ground here in Chicago, so winter has placed its icy hand upon the Chicago area, and we are going to get into the charts pretty quickly here, because this morning we do have Make Hogue Money right after the forecast. So I think we've taken care of all the business. Let's jump into the charts relatively quickly here. And we'll see what we've got. All right. So the E-mini S&Ps yesterday, we had a little bit of potential profit taking evident yesterday on a down day, but overlapping to higher range and value. The down day cut off a lot of volume, and we also lost about 5,200 in open interest. So maybe a little bit of profit taking. Maybe we got a little bit too long to continue this move to the upside, which obviously we've attracted new buyers here this morning. So the price bar overlap was to the upside yesterday, though we put in a lower day. The lower volume, we've been waiting for the PPI today. We now know that that's out, and it's going to further complicate our opportunities for us today. We're going to be opening largely in a big amount of space. Now, this gray line up here is a naked point of control. I chose not to use that for the weekly kickoff level. That level is 40.74. That will be the first kind of visual target I think that traders are going to be viewing, and if traders are looking at it, they will eventually bring price there. So we've got a kind of new life in this upside move here. Take a look at the 30-minute chart. So yesterday we did leave a late spike. If you remember, we talked about that on the recap yesterday. So obviously, we are going to be opening above the late spike. This market is attempting to accept higher pricing, which it has been for since really, what was that, the 13th of October? Our excess low here. Okay, this market has been attempting to move higher, and how good of a job is it doing? It's doing a pretty good job. We've broken out of one trend line. We've got another trend line that I'm looking at charts that is right up around our 41.23 actual weekly kickoff high, 41.20, 41.23. Depends on when price approaches that trend line as to where it's going to be. A couple of other things. Look on the TPO chart. We had a week high on Friday. We have another week high yesterday, leaving a late spike. Opening above the late spike, above the week high, the market is telling us that it is accepting higher pricing. It's up to us to try and figure out how good of a job it's doing in that regard. What are we, what kind of volume, what kind of participation are we going to see in the regular trading hours? Should be an interesting make-hog money today because we are opening out of range, out of value. Maybe an opening range trade will be something we'll be thinking about. And yes, of course, we know that the market, the price, again, on the dome, the cheese slipped off its cracker, and we left some untraded prices here in the S&Ps, not so much in the NASDAQ, just a couple of bucks in the NASDAQ, but we really kind of have a hole here in the S&Ps, which is excess below price right now. This is price. This is a sudden change in the perception of value that pushed price higher and left excess between yesterday's range and a potential range or continuation from last night. So looking at the 30-minute chart, we had overnight inventory to the long side. Before the number came out, we were kind of the high of value. It was looking like we were going to be rejecting lower pricing in the base in the late spike anyways. Now I think that they're pretty good probability we're going to be rejecting the late spike from yesterday. And we're going to be looking for opportunities, perhaps to the upside. We're going to be opening with a gap above a late spike to the downside. Everything is showing rejection of lower pricing so far. With that news, things can change. Anything can change. It's putting in a couple of week highs, rejecting the lower pricing. It's going to be, I think, a challenge to find the right direction, to find good trade location early in the session today. Although I believe possibly one of the best trade locations of the day will occur early in the session, which, again, makes things a little bit more challenging for us, doesn't it? Yes, Spencer, I think we do have good upside structure still. I mean, when we're looking at the daily, taking a look at the continuation chart, I mean, overall, in the long time frame, it looks like this market is continuing to put in lower highs and lower lows. In the medium time frame or short time frame, we've been putting in higher highs and higher lows. As long as we can continue that, this is that trend line that people are talking about right here. It's off the high. It's got contact. It's got relative contact. This is the one that everybody's kind of focusing on next. And it looks like, again, right around 41.20 in a couple of few days here, we may come into contact with that level. And that is why the weekly kickoff level is close to that. And, this would be a true, I think, state breaker in the longer time frame, is if we can get up above this trend line. We do have work to do before we can get to that. Take a look at crude oil now. Crude oil testing and kind of showing some signs of possible acceptance below weekly kickoff low. It's in the teeth of rollover now. Probably tomorrow or Thursday, we're going to see more volume in January than we see in the December contract. I will let you know when I would be changing. But again, I kind of bummed that this opportunity for us is happening during rollover, because again, I think that the potential for continuation, the potential for big moves is a little bit diminished during rollover, because our longer, bigger money traders are focusing on getting a cheap roll more than worrying about directional activity. Of course, they will get forced into directional activity. And because it's so close to the weekly kickoff low here, which again is 85.25, pretty much our low from yesterday, I think that, there is the distinct possibility that they could get forced to adjust inventory. So we added 20,000 overall in open interest on this push to the downside yesterday. We lost 14,000 in the December contract, which tells me that the future months really added a lot of open interest on this push to the downside on relatively okay volume. But I think that there was a pretty good open interest increase in this move to the downside, even though it's rollover. So we've got some new sellers betting on this market going lower. This is the move from yesterday. Settlement 85.87, if that's going to come into play today. I don't think that we really have any excessive overnight inventory. If there is, it's a little bit shortish. The weekly kickoff low is certainly in play today. Now, it's been somewhat magnetic. It's been trading both sides. I caution to use this as pivotal. I'm going to be looking for more information as the market opens. And again, we are going to be opening with a gap and below an important inflection level. So the opening range trade might be something that would be worthwhile if the risk is not too great. We may come back to this and see if we can watch the open to see if the opening range trade does offer a good opportunity. I would be looking for the opening range trade to open, leaving the opening range at the high of the session, and look for the continuation to the downside just because we're below weekly kickoff low. You can see in the overnight, yesterday the market traded right down to it before the extended trading hour close, and we held it, traded both sides of it. We are now currently below it and getting ready for the open in just about 2 minutes. So let's take a look at the NASDAQ. It's going to be very similar to the S&Ps anyway. We had a pretty decent volume drop. We lost 5,700 in the NASDAQ. It's an estimated drop in open interest, but that's even greater than the S&Ps on an overlapping to higher day, overlapping to higher value, very similar to the S&Ps. But the NASDAQ actually held up better than the S&Ps yesterday. Take a look at the 30-minute chart. Okay, we did not leave a late spike. The NASDAQ was stronger, holding inside value by the end of the day, or close to it. 11,734.75 is settlement. Overnight inventory to the long side, opening with a gap, already testing to this previous naked point of control. Did not trade it during regular trading hours, so we're going to leave it there. Here's the TPO chart from this morning. So just a couple little holes here. Nothing like the S&Ps put up. Just a couple little holes. Of course, these TPOs are 4 ticks each. They're full points. So again, in the NASDAQ, we've got the gap, we got gap rules, we've got space above, we are out of balance. Early opportunities may provide the best trade location. Let's see what we got here. So I think we've just opened. Here's the opening range. It's the 1 minute chart. The opening range to me is the first minute of the trading session. It's not giving us our opening range. That's not going to do it. So our opening range so far, high 84, 95, 54. So we're at a 40-point opening range. That's $400 for a one lot. And that's we haven't even completed the opening range. We keep expanding it to the downside. So we're almost at 50 ticks of risk in the opening range trade. If we get the opportunity to come back in the opening range, if we break out below it, you might be able. Oh, here we go. There it is. Here's our opening range. So we have yet to break out either side of it. Let's go back and take a look at that in a little bit. Gold. Well, 94, 91, 80. So within a couple of bucks of weekly kickoff high already this morning. Upside momentum seems to be kind of falling off. Look at the volume. Now, we're probably going to see some decent volume today because of this morning. But we lost 5,300 in open interest yesterday. It's kind of telling us that we're getting a little bit rich up here. We're getting a little bit too expensive. Weekly kickoff high is an area that we're going to need new business in order to continue this move to the upside. We had our island bottom here. We've had one heck of a move off of that. But the market is kind of telling me through a couple of things, these whole moving averages are now holding above price, both of them, the 9 and the 13. Weekly kickoff high, an important inflection level. Open interest and volume starting to fall off up here. The market, the auction process, the auction is not doing as well as it was at the beginning of the auction, of course. It seems to be getting a little bit aged, a little bit tired. So weekly kickoff high is an important level for me today if we get the chance. Take a look at the 30-minute. There's our weekly kickoff. We get to take off this naked point of control because the market did knee-jerk up there during regular trading hours, and now it's right back to where it was. Overnight inventory is still holding possibly a little bit to the long side. So I'm going to have to try and stay patient because we've already closed any gaps. We've tested in very short time frame on some pretty decent volume up to near the weekly kickoff high and showing some excess up there. This is showing This is showing excess. This is saying it got too expensive and sellers took over. If that remains, we could see this market pull back. We've got a couple of kind of weaker structures. We've got a little bit of a gap down here. We got a naked point of control down here. I'm not suggesting that this is going to be the all-time high for gold ever, but it just seems as though the auction process seems to be suffering a little bit to the upside. Okay, we got a big dive in the dollar, and gold didn't jump. Gold didn't even test the weekly kickoff high. That's a little bit suspect, if you ask me. Continued U.S. dollar weakness has this market continuing to the upside. Excuse me. Volume continues to fall off. We lost 1,900 in open interest yesterday and an indecisive day. Again, very similar to gold. I mean, we actually looked above the weekly kickoff high here in the euro, but we couldn't get there in gold. Probably a little bit more direct correlation, you think? Again, we're going to need new business for this rally to continue. We've lost a little bit of open interest. Here's the 30-minute chart. Settlement here, opening the overnight down here. We're holding a lot of overnight longs. Look at where this market was on 465. This is weekly kickoff high. I mean, the market looked above it and then finished that 30-minute bar right on it. Started this one, looked above, and now seems to be rejecting. If we can't see new buyers coming into this market, I think we've got enough overnight longs to try and push this market back to close the gap at least. Again, if we accept above weekly kickoff high, we need to go with it. If we can't accept above it, there's one thing to do, and that's range here, or come back down, close the gap, and trade back to settlement, or even lower, because we know that the market opened all the way down here last night. So all of this is overnight longs. If we don't have new business to the upside, it'll take care of the old business. All right. So with the news, it's going to put out, I think, the perception that the Fed will be able to slow the roll on rate increases. Don't kid yourselves. We still have really bad inflation. All we're seeing are some of the tea leaves that say some of this is starting to ease a little bit. All right, so here's the 10-year. Of course, the yield on the 10-year did come off a little bit after the number. Open interest, we lost 4,600 in open interest yesterday. Now, if you remember from the forecast yesterday, we looked at the idea that this might be actually a bull flag, which it did break out last night and is showing signs of continuation, and with lower yields, that's likely to continue. I'd love to see this market give us an opportunity up to the weekly kickoff high, which is 113 and 15/32. Take a look at the 30-minute chart. There's weekly kickoff high. Here's our bull flag. 1, 2, 3, 4 points of contact during regular trading hours. We opened above it. Okay, what's the continuation? I mean, there is a long flagpole on this bull flag. It makes sense to me that if we do continue, that a check of weekly kickoff high isn't that far off. We need to see rates ease. Of course, here's the natural gas, which is now firmly in the front of rollover. It's a week from tomorrow where we'll be looking to switch to the January contract. Look at all the goo we've got here. We still have our island top. There's a lot of stickiness in this area. Volume has been holding. We lost about 500 yesterday, which I'm kind of surprised by that. I mean, the Freeport liquid natural gas port is not going to be able to export liquid natural gas until the end of December, beginning of next year. We saw the reaction in the market, but it really hasn't caused a big stir. I think everybody was probably kind of expecting it. So here was that announcement yesterday. We have an inside day yesterday. With an inside day, well, not anymore. We just took out the low from yesterday. Now I think if we do see this market continue lower, we've got weekly kickoff low here. Do we have any overnight inventory? Maybe a little bit short now, but the market did just open. I'm going to venture to say that our opening range trade in crude oil has held as the high of the session. Let's take a look. Nope. Held as the low of the session. So now, I'm glad I wasn't really looking to take this. because I don't think that the upside offers that much of an opportunity. We've got weekly kickoff here, looking to see if the market can still maintain weekly kickoff as an important support level or resistance level. We have come a long way in a short period of time. Last week's high, last week's low, kind of at the bottom end of the range area here. So lots of decisions going on as far as positioning is concerned at this level. All right. You know what? I forgot. I didn't say hello to everybody, and I apologize. Shaw, Jules, Scott, Sawney, Concord, Theo, the Rooster, Gnostic, Orion, Michael, Stephen, Sonny, Mango Heist, Caprice, Center Entity Trader, Haggle Matters, Dimitar, Jan, Spencer, Glitter Sandwich, Spencer again, the Scarlet Arachnid, Charles March, Vince, good morning, Fred Decker. I think the S&P 500 has been trying to move higher, but short-term inventory got too long on both Friday and Monday. Tuesday is an opening above Monday's late spike. I want to buy. Just be cautious, Fred. Come join us for Make Hogue Money. Scarlet Arachnid has the quote for the day. Success is not final. Failure is not fatal. It is the courage to continue that counts. Winston Churchill. That's one of my dad wisdoms that he said he made up. It's a great quote. Thank you very much for those, Scarlet Arachnid. JD, the Bulls are back. Sean, Anissa, DA, Doji Candle, George. We've got a dog bed that we've had for Lacey for 2 years. She has never laid in it. This morning with the snow, she is now laying in her bed. I can't believe it. I had to take a picture of it and send it to his grandma and his dad, or her grandma and her dad, my wife and my son, because she's very peaceful inside that bed right now. I can't figure it out. We could not get her to lay in it. Now she's in it. Dr. VJ, good morning. Rick, love you. Edelson, Jason Lewis, Joe, Danny Ireland, Caesar Dowitzer, good morning. JD Royalty, Fred Decker by 9 a.m. I've usually been drinking for 2 hours. Will group coaching tomorrow be available online? It's going to be on YouTube. It's going to be on YouTube because we want as many people as possible to be able to ask questions of Jared Tendler. And again, we're looking forward to it. The position when the market rallied, shot the roof. Love it. Oh, that's good. That's lucky, Edelson. Good job. I agree. We'll think one more extension to complete the fourth pattern. Spencer, George, no shorts today, long only. Jay Gilmo, good morning. Thank you, Joe, for having everybody hit the like button. Of course, it's always appreciated. It's going to be the hardest part of this market to trade. Things are looking up, but are still balanced. It complicates things when the market's open like this, doesn't it? It's Three Lions Insight. Good morning, Mike. Anissa, good morning. Stephen, Robert, Lex Trader. If you didn't sign up, and if you signed up and you didn't get the link, Fred, check your spam folder, but I'm going to send you the link right now because there's 2 different links. There's a different link for the morning Make Hogue Money and another link for the afternoon Make Hogue Money. But here is the link, Robert. There it is for today's Make Hogue Money. And all right, we will be ready. And Sarah Hall, if I missed you, I apologize. And we're going to get ready for Make Hogue Money. So take your deep breath. Stay humble, grateful, and creative and calm today in your trading. Opportunities will be coming by all day long. Don't go looking for them. The ones that find you tend to be the best ones. That's what I'll be looking for. I told myself yesterday, I was not going to trade, which I did, and I'm glad I did, but I'm glad I was flat before my power went out, because my neighbors are putting in a new fence, and the clowns that are putting in the fence hit the power line and cut everybody's power off. We're back, and hopefully that doesn't happen again. Again, my apologies for Make Hogue Money yesterday and group coaching. Again, if you have a question in for group coaching, we will address those this coming Monday on the group coaching session. All right, it's enough. Be kind, be good to yourself, say a prayer for peace. Let's get ready for Make Hogue Money. And if I don't see you, trade well today, get some money, make some money, and I'll see you later.